Good evening, everybody. Thank you, Satish Bhai, for giving me this opportunity. I know you have been after me for the last couple of days that I must come and say something on this topic. And it was really confusion because I didn't know exactly, do I talk about any success story or do I talk about something particularly about the banking and financing? So I chose to talk about capital commerce, the evolving landscape of banking, trade finance, and fundraising. Our focus is on the dynamic shifts happening in the banking, trade finance, and fundraising, which are the lifelines of modern commerce. We will explore how these sectors are evolving and what the future holds. But before I talk about that, it's very important because Satish Bhai did ask me, they want to know in terms of how did we start our journey into banking and what was the kind of incentive which took me back to Uganda. I'm born in Uganda and left in '69 to go to UK. And at the time, 2 years later, Idi Amin expelled all the Asians and we couldn't go back to Uganda. Now, after doing the education and getting married, I still have my heart and my love for Uganda, and I thought I must go and visit Uganda once in my lifetime. I came down in 1982 in Uganda, and I saw totally the country was devastated. The road structure, everything there was just destroyed. And like what Mayubai said, all the manufacturing sector, industries, everything was gone. Now, in UK, I educated myself as a chartered accountant, so had the finance background in me. And looking at all these opportunities here in Uganda, I said, hang on, coming from an entrepreneurial family, I said, there is something I must do. I was only young, 25 years old. And I said to my newly wedded wife, listen, you have to give me the support because if you don't, it's going to be very, very challenging for me to come into the business here in Uganda. But my wife was very supportive. So in those early days, just newly wedded, we settled down in Uganda. And the initial businesses which I did was there was no essential commodities available in Uganda. When I say essential, there was no sugar, no salt, no cooking oil, and not even any particular, even the bread, we had to get it from Kisumu. The local food, everything, there was just nothing there, and that created a huge opportunity. But the biggest challenges came, funding. We didn't have the money. We had just got qualified, coming as a young person, and said what to do. But anyway, with God's grace, and like what Dinesh Bhai said, early bird, early opportunity. And that's what exactly happened. We realized that it was a lot of opportunity for us, and it took us a time to start building ourselves and our status. But even the banking industry was so primitive. When I say primitive, they just didn't know any kind of products besides simple, bank the money, take the money out. If you try and talk to them about any kind of products, LC or whatever, they want 100% margin on that LCs. And you would say to yourself, if I'm going to give you 100%, why would I not just send the TT out and buy the goods directly? Anyway, all that, cutting short, I don't know because it will go to take the whole evening if I start talking my journey about Uganda. As we moved forward in the years, I realized as more and more my trading activities was evolving, there was becoming a huge challenge for me in terms of how to do a proper banking with the banks. And we saw there was a total vacuum. So one evening, I was with one of the ministers of finance, and I said to him, I want to set up a bank here. And he said, yes, there's no problem. We can do it. And I said, what is the minimum capital required? So that time in 1989, it was $500,000. Now, by that time, my businesses were successful, and I said, if this is what it takes me to set up a bank, I'll go ahead and do it. And that's how I conceived the idea, set up the bank, build the bank up, sold the bank once, bought the bank again, and obviously now where I am, I've joint venture with I&M Bank, and I&M are partners because we wanted to enlarge into a larger institution. So I'll go back to my theme today, basically raising the capital and all that. Let's start understanding the critical role that capital plays in global commerce, from funding startups to the financing international trade. The movement of money is what powers our economies. These three domains, banking, trade finance, and fundraising, are becoming increasingly integrated. What do we need? The traditional banks had long been the cornerstone of our economic activity. They just provide a safe place for savings and a crucial source of credit. Regulatory structures help maintain that trust in this institution. That's why we kept the money in those banks. But there has been a huge disruption in banking. What is that disruption? Now we are saying that new fintechs, neobanks are offering slick, digital-first alternatives. Open banking regulations have enabled third parties to offer tailored services, and central banks are exploring digital currencies. Then we look at another big product in the financing sector is the trade finance. Early days, the trade finance was very normal, simple, which was the letters of credit guarantees, and it reduces the risk of and improves the liquidity for exporters and importers. Trade finance has supported nearly 80% of the global trade. It reduces payment risk and ensures smooth transaction between buyers and sellers across the borders. But it's still a space ripe for innovation. Now, challenging in the trade finance, these are still the legacy systems, and trade finance is still plagued by inefficiencies. The reliance on paperwork leads to delays, errors, and small companies struggle to gain access to. So innovation in the trade finance has changed. This is changing very fast. We are hearing about blockchain is making trade more transparent and secure. Platforms like Marco Polo use smart contracts to automate the transaction and reduces friction. Fundraising then and now. Fundraising used to be exclusive club. Startups needed bank, loans, or VC backing, and only the elite could go public. But this is no longer the path anymore. There are modern funding trends now. Crowdfunding, equity crowdfunding, and angel networks. Now, when I say all that, there is a decentralized finance, which initial coin offerings. There is also specialized purpose acquisition companies which help you on your IPOs, and it's not just the plain vanilla IPOs. These methods have given the fundraising, crowdfunding allows anyone to support a project, and DeFi platforms enable peer-to-peer investments without intermediaries. SPACs offer a faster route to public markets. The role of regulation. With innovation comes responsibilities. Regulations like payment service directives encourage competition while maintaining security. In crypto and DeFi, new rules are being developed to protect investors and curb illegal activities. So what is the future landscape now? The future landscape is inclusive financial services, ESG, and impact investment on those rise. We looking forward, the financial ecosystem will become more embedded into everyday services. Digital currencies will need to work across borders. Financial inclusion and sustainability will be the key goals. There are so many case studies and examples, and if you look at it now, the modern payment infrastructure, there is Revolut, Monzo, digital first banks. There's a blockchain platforms and the fundraising Ethereum, which is an open source blockchain platform, second largest cryptocurrency platform by the market capitalization after Bitcoin. Yes, all this comes with opportunities and obviously risk. So what are the opportunities? There are financial inclusions, faster, cheaper services, and broader access to capital. And the risk, cybersecurity threats, regulatory uncertainty, and asset volatility. So all along this, if you look at it now, the banking dynamics are changing around the world. The banks are not pure vanilla banking like when we started 35 years ago. It was a simple transaction, banking, taking out, giving loans. Like even in Uganda today, I will still tell you how much still the system is backwards. Although we have got IFRS regulations and all that, as a collateral security, they don't even take any tangible assets in their calculations of any non-performing. So if your asset was non-performing, straight away after the allowable days, you have to provide 20%, 50%, and 100% provision. So all the banks were having a lot of challenges, and this is why the minimum capital requirement has also gone higher in Uganda. So the banking market or the banking industry is changing, and I just hope that we all have to move along with that. And in certain ways, I feel that it is going to benefit the new generation, new dynamics of the market, which is evolving, that the bank will be able to support with all these new products and all that. So with that note, thank you very much. Thank you, Satish, for giving me an opportunity. And I hope mine was something knowledgeable to everybody. Thank you.